Hey everyone, thanks for joining. Of course, here with Sheldon. Got a pretty exciting topic of extremely trend. We're going to talk about shorting. Definitely going to mix in GameStop, AMC, Silver, and see where we go. I really wanted to just do it extremely high level. Sheldon, first things first, how are you?
I'm doing tremendous. It's wonderful to be alive.
Yeah, good. Crazy times, obviously. Especially the move to shorting silver or the squeeze on silver. But let's chat. Do you want to kind of introduce shorting? I know a lot of people. Some extremely experienced, some entry level people are going to see these videos. Do you want to give someone just a very high level view of maybe what shorting is, and then we'll go from there?
Sure. My preparation was at dinner last night when my wife and my daughter asked me the same thing. And their question is how can you sell something you don't own? And it's a very complex topic for those that are not involved in the stock market. But it was always meant to be sort of like a boundary for overpricing of stocks where, historically stocks are bought based on fundamentals, and that's how much earnings they're going to earn over the lifetime of their company. And often you get irrational exuberance where you get prices that go beyond what is fair. And then short people come in and they borrow someone's shares to sell them because they feel that it's just overvalued. But it's really meant for sophisticated investors and not for general investors because the complexities of it is that when you short a stock, there's no limit upon how much you can lose. Whereas if you buy a share long, if you bought it at $10, it can only go to zero. It can't go below zero. So this whole scenario, which to me is all about the democratization of investing, where the little guy is kind of tired of being manipulated by shorts. And this is where we've got a real problem in financial markets today, and an area where I certainly have been beaten up, where I've invested, especially in the junior market space, where sometimes these shares move up and then, because they're not earning profits and thriving like a seasoned company do, shorters come in and they try to destroy them, especially when these companies need money. So I'd say the word shorting has extended into the word manipulation. And that's sort of what is the precursor to, I presume, the brand of the week in terms of shorting, which is GameStop. So I can continue on if you like of what I think about that.
I think you did great. And I mean, we're going to talk GameStop, we're going to talk AMC, going to talk silver. So for people that aren't familiar with what a short squeeze is, do you want to talk about that? And, obviously as it relates, I guess the easiest one is to GameStop.
Well, yeah. So when you short a stock, the difference is, you have what's called traditional margin requirement. So on a normal stock that's above $5, you'd get, say, 50% margin, meaning if you bought 1,000 shares and it was $5,000, if you didn't want to pay all cash, you could borrow $2,500 from the broker and put down $25,000 as capital, and $2,500, sorry, and you would own that 1,000 shares of that 5,000 of the $5 stock. I'm sorry. So what happens though is, if let's say you're on the other side of that and you go, I think $5 is too expensive, I'm going to short 1,000 shares. You have to put up a margin requirement that's more than 50%, and I don't know the exact numbers, but it could be 200 or 300%. So what happens is when the price of a stock rises, if you're short, you have to continue to put up more capital to hold that position. And what happens is in a short squeeze is the price keeps going up, and then firms like this firm, Melvin Capital or whatever the name was, didn't have enough capital to maintain its short position in GameStop, and they were forced to buy the shares back. And then they had to go and get third-party capital to shore up their balance sheet so they wouldn't go bankrupt. So that's, again, where the problem is. There's no limit on the upside. So you have to put up more capital when you short a stock. And the squeeze happens when the shares rise in a manner that outstrips one's ability to maintain their capital ratio, and then they have to buy the shares back. And that's really what happened in GameStop. But GameStop is an example of a highly extreme example of shorting. It was manipulated to the point where there were more shorts than there were shares outstanding. So in that case, it was really illegal, in my view. And everything I've learned, it's called naked shorting. And it's really not allowed, but regulators do not enforce it. So they've allowed the decimation of so many companies because they have not enforced naked shorting. And there are many examples, and examples even in our portfolio, where junior companies are exposed to all these short groups, and they tend to work in like packs, like wolf packs, and then they go and they just destroy the retail investor by selling shares they don't own, forcing the shares down, causing margin calls, and individuals who can't hold on, and they're forced to exit their investment. They have a bad taste about investing and leave and never come back. So the reverse is happening here, where all of those victims who, are part of Reddit or Robinhood, basically said, you know what, we're tired of being abused and screwed by all these short consortiums. We're going to all get together and do the opposite, and we're going to buy. Now, they picked GameStop, but they didn't pick GameStop because it was worth more than what it was trading at. It was just they knew they could force a short squeeze. And so, in a way, it's reverse manipulation, except acceptable because the villain is getting nailed. And that's what's made this so topical. But on the other hand, it's really all the securities regulators who failed in their job to monitoring. And there's been tremendous number of complaints over the years, many in Canada, the same as in the US, that basically say these stocks are being manipulated down. Companies are unable to raise capital. They're going out of business. Please stop this illegal shorting. And it's fallen on deaf ears. And unfortunately, a big part of it is that all the major brokerage firms and banks are all part of the profit side of shorting. And it's undemocratic and it's unfair. But what it's done is it's brought a lot of attention to the industry and has brought in a lot of new investors, retail investors, who are empowered now by the internet and by being able to buy shares online. And so that's a good thing. It's brought in more investors and it's made these stocks more liquid. But on the other hand, GameStop at the end of the day is probably worth zero. And so it's a bad example for people to want to buy, even though you can trade, and professional traders have traded. It's not a stock to own for the long run, because the only way that company can perhaps be a successful surviving entity is if they go out and they raise a lot of money, which I understand they're trying to do, because there's a lot of people still short that need to buy shares back, and there's no shares to buy. So if the company issues shares, then it's going to get a lot of capital, and it can pivot in its business model, because right now the business model it's an old business model. It's a bricks and mortar model, and that's why the shorts targeted it. So it's not a company to invest in. It's just a trade, and it's not recommended that anybody buy that. That company is only for professionals, the guys that know how to play the game from both sides. And so,
well, here
I strongly encourage that people do not buy it.
Because we got to talk about silver, we got to talk about some other stuff. Because now, and first I want to chat about, really this is the first time these massive shorters get exposed, and I see it as a good thing in some ways, not because these guys have been taking money and now they're getting killed. I look at it as this is now a factor that these guys need to look at when they're shorting. They need to say, okay, how much of the float is exposed to a potential short squeeze? And that's why I think this is a huge wake-up call for these guys. But I'm curious, and now to ask you, so first about that, but secondly, now you're seeing people talking about silver. That's like the today. What's your view? Is silver also like if we're following these short squeezes that the really the Robinhood guys and of course the Wall Street Bets guys are putting on? Is this a a trade, something you could be in and out of in the same day, same week? Or do you look at some of the companies they're touching as, hey, you've got to look at the fundamentals at the end of the day, and just because it's getting short squeezed doesn't mean it's not a good long-term play? Curious for your views.
Yeah, so silver is entirely different as a commodity than an individual stock. An individual stock is much more finite in terms of the number of shares outstanding and its fundamentals. Silver is a way more complicated, much larger market, not so easy to manipulate in a short squeeze. People have tried for years. I happen to be a long-term investor in silver, and I know that it's been held down by the bullion banks, as they call them. And it's like fighting a central bank. It's almost impossible. It's not like fighting an individual stock, way different. Now, would I recommend people buy silver? I like silver a lot. I think silver, it's used in industrial purposes as well as a store of value. So I have no problem people owning it, but I believe it's entirely different. And it's entirely different than an individual stock. And, you know, I think that people should be very careful of this herd mentality.
Again, really into chat. Quick, what was your view on, where I was saying, now this is something the shorters have to look out for? Would you also feel the same way, or is there other things?
Yeah. Very, very much I agree. It's now, I'm aware of some legislation that's making its way through Canadian securities organizations that's going to restrict the ability of shorting, naked shorting, and shorting with long settlement terms. And that is putting everybody on notice. And I can give a great example of a company that I've been involved with now for 3 years. It's been public for a year and a half, and shorts have destroyed market confidence in the company, yet it's one of the best. It's in the area of medical cannabis. In my view, will be the world leader. It's trading at a fraction of all its peers. And the shorts, I believe, are just under the amount of shares that are available to trade, what we call the free float. It's a company called Avicana. And I look at it and I go, there's a company that's valued at about $40 million that has deals with Shoppers Drug Mart and all kinds of great entities, produce very well-run company, and yet the shorts have forced the company to raise capital at way lower prices than they should have. Now they're finally capitalized, have a great future, and if I was a shorter, I would be extremely concerned owning that company because there are not a lot of shares around for the shorts to cover. So they have they're caught in a corner. But what the harm they've done to the company, its management, its employees, its investors, it's just awful. Another more recent example is a company called Loop Insights, Matrix, where the company's had some tremendous press releases and has really got a fundamentally disruptive technology. Yet the shorts manipulate that stock on a daily basis and knock it down. And it's like a tug of war now between the shorts that want the shares. They want people to panic. They want the shares to go lower so that they sold, let's say at $2, they can buy it back at $1.30. And that's manipulation. That's not shorting in a traditional sense by saying, okay, it shouldn't trade at 12 times earnings. It should trade at 10 times earnings. So it's 10% overvalued or 20%. That's entirely different. What we're talking here is real manipulation, typically naked, so that the world does not even see that the companies have these short positions. But it's really hurt Avicana a lot, and I think they're going to get hurt a lot because investors are starting to realize what a great company that is, and it shouldn't be trading at where it's trading at. And in the same way, I believe Matrix has a tremendous future, and I've said this before, and that one day there's going to be a press release that the shorts are just not going to like, and they're going to be forced to go, like Paul McCartney says, band on the run.
Oh, great. Hey, you gave some good examples of even clients you have, but very real. And, people are very familiar with these shorts that are on GameStop, shorts that are on, AMC, et cetera. But I think you gave some good insight into the kind of, smaller cap world and, how big of an issue that they cause, which was fantastic. And it starts a lot of these new technologies, these great companies from getting to where they could be because they have to raise money at much lower valuations. So I think that was a great insight. Anything else about shorting or about these other companies or anything else we wanted to chat about?
Well, first thing, all these companies in many cases are apples and oranges. BlackBerry is a Canadian company. It was always been highly shorted, but it's not a company on the verge of bankruptcy. AMC, on the other hand, with COVID and people not being able to go to the movie theaters, was bleeding something like $120 million a month. And I believe that they had a shelf prospectus in place that they were able to raise maybe 500 million. So they've actually been able to raise capital from the shorts covering. So those are different examples. One's going bankrupt, and the other is just a heavily shorted company that people are betting against the technology ever becoming commercial in those situations. Now, these are also highly liquid companies that trade in the U.S. and have a lot of they're in the limelight, and they're on CNBC, and they're always being talked about. The world I live in is much more in the more junior cap world, but a lot of people play these small junior caps, and they don't understand why the values are so low and why they're always losing money. And it's the same sort of thing, but a different style of shorting, not against a bankrupt company. These are going concerns. It's more just, I'd use the word manipulation as opposed to investing shorting.
Yeah. No, interesting. Good points. Hey, I guess to cap it all off, be careful. I definitely, we see the hype, we see the trend. Hopefully, Sheldon gave some good insight, but also, be careful. I know my sister said to me, she got GameStop at 240 or something. It was, up at 300 today, down at 100. And she was like, oh, I don't know what I'm going to do. I might wait a few weeks. If you're in those types of trades, it is a trade, something short term. It should be treated like that. At least that's our view. Sheldon, anything you wanted to say about, kind of that stuff?
Well, first thing is I don't short. So I like to know that if I'm going to lose money, I know how much the maximum I'm going to lose is. Also, be careful what you listen to on these pundits on TV. And just because all this attention is being shown, it doesn't mean that it's an investment recommendation for individuals. So, caveat emptor is an understatement. I believe people should be very, very careful, do their own homework. I've always said, try to understand what they're investing in. But like you said earlier, I believe now the cat is out of the bag and that the short manipulators have been exposed. I believe legislation is going to come in south of the border and in Canada that is going to make it much more difficult. And I believe that that's going to be in the best interest of capital markets for all investors.
Yeah. No, awesome. Well, hey, I think we'll cap it there. I think this was a very informative video. And again, I invite anyone who has questions. Sheldon is an extreme expert in a lot of small cap investing, runs, of course, ThreeD Capital, and does a ton of other things. So if you've got questions related to investing, shorting the markets, make sure you drop them below. We'll try and do some Q&A stuff coming up. But Sheldon, thanks so much for joining.
Listen, thank you, Jason. Good luck to everybody. Be careful.